Hello everyone, my name is Michael Lamott. I am the founder of ChartYourTrade.com. Our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we're going to do that today is to talk about what kind of stocks we want to buy. And one of the things that I like to screen for is stocks with outstanding sales. And I'm not just talking about, a quarter over quarter growing just a little bit, or even having 10% quarterly growth or 25% quarterly growth. For this particular scan, I'm looking for stocks that have 50% quarterly growth, that are accelerating quarter after quarter after quarter, that have at least 25% annual sales growth. The reason why is because we want stocks to have sales growth, of course, because any business needs to have sales in order to continuously grow and for its stock price to move higher. But there's a lot of other things that can go on with a stock or with a company. So for this particular scan, I'm only interested in the best of the best of the best when it comes to sales. And so that's what this scan is going to give us. And I want to walk you through it and show you some of the stocks that have passed recently. So let's take a look. Real quick, just to review before we dive into the actual scans, here's what the parameters are. And you can set this up in your own brokerage screening tool or whatever kind of screening tool you use. There's a lot of free ones out there. FinViz is a real popular one. You could take these, plop it right into there. We also have our own scanner, ChartYourTrade MRI, that we're going to use for the purpose of this video. And it's a predefined scan. You could just click a button and it'll run all this. So anyway, real quick, here is what we are scanning for. Accelerating percentage change in quarterly sales for each of the past 3 quarters. So quarter over quarter over quarter, we want sales to be accelerating, and we're looking at this quarter, so we would be looking at Q4 of this year versus Q4 of last year, not Q4 of this year versus Q3 of this year, because doing it with Q4 versus Q4, it takes out seasonality, right? So if sales are down because Christmas is hot versus the autumn or the summer months, then looking at it Q4 versus Q4 is going to eliminate a lot of that. So that's why we want to look at it that way, and that's what this scan is going to do for us. Next, we want the percentage change latest quarter's sales versus the same quarter of the prior year, same theme, to be at least 50% or greater. That's the part that's really going to set this particular scan apart from anything else that we're going to look at. And again, this is just for outstanding sales. Next, we are going to look at annual percentage sales growth rate of the last 3 years to be 25% or greater. Next, we're only interested in stocks that are at least $15 or greater. That's something that's going to make them of institutional quality. In previous videos, I mentioned this. I'll mention it again here. There's a lot of institutions, major mutual funds, hedge funds, pension funds, that can only start investing in stocks that are at least $15 or greater. So we want those kind because it's going to be their buying that's ultimately going to drive the stock price higher. It's not going to be me or you. And lastly, I like to look at stocks that have the average volume of at least 100,000 shares traded per day or more. And that's pretty small in itself, but I'm making that be the cutoff because I don't want to eliminate anything prematurely, but I also want to have some kind of a minimum threshold, because if a stock is not traded that often, then one big player can come in and move the entire stock, and that's how you get these dramatic swings, and that's not something that we're looking for. So let's dive into what the scans are showing right now. So what we're looking at here is called the Super Sales Scanner within ChartYourTrade MRI. It's looking for all of the qualities that we just discussed for outstanding sales. And so of the 10,000 or so stocks that are actively traded in the market, when running this particular scan, we have the ideal growth scan set to 50% right now. The ideal growth stock scan looks for 50% of what an ideal growth stock has. The stocks that have historically made gigantic runs of 200, 300, 500, 1,000% or more. And it's checking off 50% of the boxes on that list, and it's giving us the results of that. If we wanted to expand this list and only have the results of the Super Sales Scanner, we would get 9 stocks this week. So let's go through the 9 that we have here, and let's dive right in. All right, so the first one up is Applied Optoelectronics. The ticker symbol is AAOI. This is one that was passing our scans for well over a year. Talked about it on NASDAQ TV a few months ago. Had a gigantic run, and as we'll see right here, it's on a huge downtrend. Now, just because a stock passes a super sales scanner or has gigantic sales, a lot of the time stocks will move ahead of their fundamentals, and we'll see a breakdown in the fundamentals long after prices already collapsed. Here we're seeing that happening, and so you don't want to just buy a stock or consider a stock just because, oh, it passed this scanner or it passed that scanner. It's always very, very important to consider what the chart is and what the chart action is, and because it's what the market is doing, right? So we're interested in the market telling us if the stock is going higher or if it's going lower, and then wait for our opportunity to buy. Our opportunity to buy AAOI was way back here. That's when it was initially passing, and it gave us multiple opportunities to get in down at around 25. Then when it broke out of this cup over here, back at around $59, $60. And then when it pulled back over here and it broke out at around $67, $70 and made that parabolic move to 100, and then getting out right ahead of earnings. And there's a video on that as well. I'll link it in the description. But anyway, it's on a big downtrend now, and not something that we'd be interested in. Let's move on. Arista Networks. Here we're seeing, again, it's sales that are driving these kind of moves. Arista Networks happens to be passing multiple scans. That's what it says right over here in the scanner. So far, it's up 118% on the year. Came on the radar a long time ago as well, and it's just continued to have a fantastic move. And it's being bought very heavily. That's what these volume bars are. This is a weekly chart, so when we see these huge skyscraper volume bars continue to drive price higher, that's generally a good thing. But again, we want to be mindful that Arista Networks has had a very strong move already. Presently, it's extended from any kind of a base, and therefore it's not actionable as of today, but we want to keep it on the radar for all the fundamental reasons that we already spoke about. Bit Auto Holdings, again, sales, right? Driving the stock price higher, and well, we see that it's rallying, it's testing this moving average here. Happens to be the 9-week moving average. Normally, I like to look at the 10-week moving average, but the way that this pulls the chart, it's pulling the 9-week moving average. Here or there, it's moving averages define what the trend is, and it helps us see what the trend is. So 9-week, 10-week doesn't matter that much when we want to get super granular and we're looking at the technicals of where we're going to buy, sell, where support is. Then we'll look at it. But just for the sake of scanning and getting a quick look, 9-week is fine. Let's continue on. Cortex Therapeutics. This one, it had a big move already. Yeah, it started running back here at around $6 a share. You could see that it broke out above this resistance level here, consolidated, tightened up, and then it was off to the races and consolidated again. Descending trend line over here could be drawn, and then when it was breaking out, it's well, when stocks pass these scans, it's a huge catalyst for when we see these moves, and it helps give conviction to participating in a move like this and keeping it on a radar. Knowing that a stock has these great kind of accelerating sales that are dramatically better than 99.999% of the market, it's worth keeping on a watch list, because it's those kind of things that are going to produce these kinds of dramatic moves. And so when it comes on the radar, we want to be ready to buy these things. Right now, the chart's saying that, okay, it's rolling over, it's kind of done for now, and then what we want to do is continue to watch it, and when it presents another opportunity, if it's still passing our scans, then that's a sign that, okay, let's take a stab at it. Live Oak Bank shares. This is consolidating here. I would say that it's a little bit of a sloppy looking cup with handle. Arguably a base on base. It had this run, it made this base, didn't really go anywhere, and now it's making a base again. This is arguably a handle area. It's a little bit long to be a handle. Generally, a handle is about a week or maybe 2 weeks. This one has been going on for about a month. So I would want to see this stock rally above this weekly high here, so 24.93. If it's able to sustain above 25, then maybe I would get interested in it in the near term, and I would use $23 as support. You can see that's the weekly low right here. But if this chart changes over the next couple of weeks or whenever it is that you watch this video, then that changes the game as well. So charts are constantly evolving, the patterns are evolving, the fundamentals are evolving, and so therefore we must look at what's current. But we always want to run the same kind of scans because it's going to highlight potential big winners and potential catalysts like huge sales. Rice Midstream Partners. Yeah, this is another one that had a pretty good run, and then it collapsed back here in June, and now it seems like it's trying to bottom and maybe put something together. It's risky. It's risky. I'm not gonna lie. I would be kind of remiss to try this one. Maybe because it's still passing the scans, I would take a stab maybe right around here at 21.86. So around 22, if I could get above $22 a share and start sustaining that with a stop right at around 20. That's kind of loose, but that's where support is on this one right now. And there's probably better opportunities out there in the market, but if you were going to try this one because it's passing the scans, I couldn't really argue against it if it's starting to build that, but I would look and see just a lot of overhead resistance right here as well. So when it starts to, if it does rally and it gets up to 23 and a half, I would expect to start seeing some heavy duty selling around there. And even this weekly high over here, which is 22.80, if it's able to get to 22.50 or 22.75, I would expect to see some resistance around there too. So something to be mindful of if you do play this. Not really something for me right now. TDOC. Okay, so this one it rallied just like all the other ones, and it's consolidating, and it looks like it might be trying to find support right around here. The low is 28.60. We'll see if that holds. It does look like there is some big support that's kind of coming in over here. That's it's a down week, but you could see that the weekly volume is way above average, and it closed in the upper half of its trading range. So we'll see. I'd like to see this tighten up quite a bit before I actually go and buy it. Part of the way that we find the high reward and low risk opportunities is when price begins to tighten up really tight, because that's going to give us the spot to enter, and also with a near term spot to exit. The closer support and resistance are, then it's giving us that low risk, high reward opportunity. We don't have that yet here, so again, another one just for the radar. Weibo, this has been on an absolute tear since the 20s. And so this is one that it already has given us a 500% gain, which is just mind-blowing. And it continues to do so. And there's been multiple opportunities to get into this one. Back here in April, back here in July, and then most recently on this breakout here. Let's just take a quick peek at the daily chart. And the opportunity to get in was right around here when it broke out, and you could have gotten in on a descending trend line break over here. You could have gotten in right above resistance right over there. You could have gotten in at this resistance level right here. And always, the name of the game is going to not just be where are you going to get in, it's always where are you going to get out if you're wrong. On this chart, support is really down here at about 100, 150, and at around, well, what is this? The pivot there was 105. So you're only risking about 5%. That's still a very good reward to risk, especially on a stock that's going to move like this one. So keep it on the radar, and we'll see what happens here. Finally, Wix.com. This one looks like it's falling apart. It does it had a monster run. It started to fall apart. Then it rallied. It got above the moving average, kind of sucking people back in. When you see a climb back above a moving average, an important moving average like the 10-week line or something like that, and you see it coming on weaker volume, I'd question the move and really want it to start proving itself again before trying to go for these advanced entry points. And you could see here that it just kind of sucked people back in, and it collapsed, and it's collapsing again on heavy volume. You see the heavy volume selling right here as it broke below, and you're seeing that again. So not one that's going to be buyable anytime soon. And that's it for the scanner. Another thing that I like to look at real quick is to just see if there's any common industry group themes that are passing. this particular scan along with all the other scans. So let's just sort this by industry group. And let's see. So we have 1 from biotech, 2 from computer services, 2 from electronic instruments and controls, 1 from healthcare, 1 from oil and gas, 1 from regional banks, and 1 from software. So a lot of tech, which it has kind of been the theme for the major bulk of this rally. I mean, look at the FANG stocks, right? Look at Facebook, look at Amazon, look at Netflix and Google. Like all these tech stocks are just continuing to move the market higher, and that's something in itself is very bullish. Look at the NASDAQ, look at the Russell 2000, look at these industries that are making the greater market, the major indexes move higher. And that's part of what's going to give us the kind of themes that, yes, something can continue to move the market higher. And we're always, always, always consulting the charts before we go and make any kind of a move at all. Thank you all so much for watching. I truly, truly appreciate it. If you have any questions at all, please leave them in the comment section below and I will personally answer you. Also, give us a little thumbs up if you like the video. That helps us out quite a bit. And also, make sure that you subscribe to our channel so that way you make sure that you get all of our updates. Thanks again so much for watching. I truly appreciate your attention and your time. And I hope that you enjoy the rest of your day. And I'll see you again in the next video. Take care.